Hi, I'm Victor. I enjoy making videos on the stocks that I invest in, sharing my analysis with other YouTubers online. I've benefited greatly from other investors doing the same. And today I wanted to review Kroger. This is a stock that I've owned for some time, and the company announced earnings today. They had a good earnings report, and I'm able to update my analysis, and I'd like to share that with you. I like to follow a process in my investments. And for Kroger, I want to answer 4 questions and then decide whether I should buy more shares, hold, or sell my shares. First, do I want to be in the industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And am I getting a discount on the stock? Based on the answers to those questions, I decide whether I buy, hold, or sell. The earnings were good for Kroger. They grew 5.6%, which is excellent. They are also growing their digital sales, which is very good. That fits with the times. They're very profitable. Everything really looked good. Really good cash flow from operations. So all things look good for Kroger, and the stock is up a little over 4% today. Taking a look at the income statement, again, revenue went up very nicely. They're already a very large company. They now have $148 billion of revenue per year. They're acquiring a company, Albertsons, and it's going to almost double their store count. So they should be even bigger next year. Really good profit out of the business. And if you look at the number of shares outstanding, they bought a lot of shares off the market, making the current shareholders own a bigger percentage of the company. So great job, Kroger. Looking at the balance sheet, cash remained about the same. And overall, their current assets went up about $500 million. Looking at debt went down $300 million, which is good to see. So very good balance sheet. Statement of cash flows, good cash from operations. It was lower than last year. I think their inventories have gone up. And as you recall, supply chains were really tight a year ago and 2 years ago. So they're replenishing their stores, building up that inventory, and that'll support a good revenue level in 2023. Their CapEx went up by 400 million. And overall, they had positive free cash flow of over $1.3 billion. The company is acquiring Albertsons, which is another grocer, and they're going to become a very, very large company. They currently have 27 stores, and they're going to go up to 4,996 stores. I imagine they'll have to close some stores where, let's say there's a Ralph's and a Kroger, or excuse me, a Albertsons nearby. They may have to close some stores, but overall, they're almost going to double their store count. So they're going to be a much larger company. I like seeing that they're going to increase the free cash flow they generate, which is going to make them more valuable. The company has a really nice, earnings release. They provide guidance. They provide a lot of good information. And they're guiding that for the coming year, 2023, they're going to be basically flat. They're going to grow 1 to 2%. So good that they're guiding that way. They provide a nice free cash flow expectation of 2.3 billion to 2.5. And I'll use this 2.3 billion as my basis for my valuation. I value companies based on the free cash flows I expect the company is going to produce, and then discount those free cash flows to today's dollars. Kroger guided that they're going to do about $2.3 billion of free cash flow. That was the low point of their guidance. So I'll go with the conservative low point. They're going to be a much larger company. So I'm going to grow those cash flows by 10% in years 2, 3, and 4. So this will have about a 10% growth rate. And then after that, we're going to grow at 3%. That gives me a terminal value after year 4 of 63 billion. We'll discount all those free cash flows by 8%, weighted average cost of capital, because they have a good balance sheet under 3x if you compare debt to EBITDA. Based on those factors, the company is worth $51.6 billion, according to my model. Their current market cap is $32 billion. Therefore, it offers a nice discount of 57%. They pay a nice dividend. It's a little over 2, I think it's 2.3% dividend. So it has good upside and it pays a dividend. Kroger performed very well in 2022. If you look at The acquisition of Albertsons, that's gone really smooth. They paid a dividend at 2.25, operated a growing business with high profit, and generated free cash flow. In 2023, they're guiding for small growth in their business, but they're going to generate free cash. The low end is 2.3 billion. Once they finish the acquisition, they expect to grow 30% on free cash flows. So it's going to make the company worth far more. It's a great run business. I believe Kroger is the best run grocery chain in the US. They have moderate upside and a really nice dividend that they pay. It's good to know that Warren Buffett is an owner in Kroger, and it gives me a little extra confidence knowing that one of the best investors is also an investor in this company. So let me scorecard Kroger. Is it an industry I want to be in? Yes, especially with the recession. I think Kroger's business is going to hold up well in this recession. The company, again, I argue this is the best run grocery store in the US. Debt is less than 3 times EBITDA. It provides a discount on the stock. Therefore, I'm going to continue to buy shares in Kroger. Thank you for watching the video. I appreciate it. I hope you found it interesting and discovered something new of Kroger. Keep in mind, I'm just sharing my experience as an individual shareholder, and I'm not recommending you buy any particular stock or bond. Good luck investing in 2023.